market does so much good on the ground, as they say at Cool Effect. We save forests, we provide drinking water, we feed children, we send women to school, we protect endangered species, that we clean the air, we regulate temperature, we improve soils, we make air quality better. It's just we are doing real good on the ground every day with these projects, and transformative impact in places that much of the world has just completely forgotten. And yet somehow we are the green ghetto. Yeah, we're the bad guys. And I still am just what is the disconnect here? Why are we having such a hard time breaking through? Because you look at the impact that these markets deliver. And you guys see it every day, right? Because you're delivering it. And I just don't understand why we're doing why we're having so much trouble breaking through and telling the story.
Welcome back to This Week in Carbon. I'm your host, Eddie Smith, here with my co-host, Rene Velasquez, and today we're joined by Alexia Kelly, Managing Director of the Carbon Policy and Markets Initiative at the High Tide Foundation. Alexia sits at the intersection of carbon market governance, corporate climate action, and international policy. Alexia, thanks so much for joining us today.
Thanks for having me. Great to see you guys and great to be here.
Yeah, so I think to start, it would be great for you to take us through your career journey. I think you have a really unique career arc around climate and energy and sustainability. You've worked in the public sector and the private sector, and it would be great to just learn about that and what drove that progression over time.
Yeah, absolutely. It's funny, actually, because my journey around environmentalism actually started when I was very young. Hippie kid that grew up during the timber wars in rural Oregon in the Northwest. And what that meant was that I sort of sat at the uncomfortable intersection of natural resource management and extraction and livelihoods and local community impacts. My neighbors were loggers and they had a fake spotted owl tied to the front of their logging truck because they shut down a whole bunch of logging in federal forests in the Pacific Northwest. This was in the early 90s. And people couldn't feed their kids. And so it was a really, I think, sort of eye-opening entry into natural resource and environmental issues for me as a child that really shaped at a pretty core level how I wanted to engage on this set of issues, because I was also watching the forest that I played in and grew up in and loved be just clear cut. And so that led me to a long and winding journey, but ended up talking my way after grad school into a job at the Climate Trust, which was the first regulator of greenhouse gases in the United States. It was actually established under a law that passed in 1997 that required that new power plants built in the state of Oregon mitigate a certain portion of their CO2 emissions. And one way that they could meet their requirement under the law was to make a lump sum payment to a qualified nonprofit that was then tasked with the job of going off and investing those in projects that were going to reduce emissions. And so this was in 2006, which was really just when the Kyoto Protocol sort of architecture and infrastructure was getting going. The EU ETS was just being designed in Europe. We were just starting AB 32 in the Global Warming Solutions Act in California, passed in 2006. And so it was just this moment where we were this is happening. We're going to get carbon pricing. We're going to have really robust cap and trade programs. And Oregon had really front run a lot of that along with California through these programs. And so we were out, when I started in the carbon markets, our first registry was a spreadsheet, right? Just on a local computer because we barely had the internet at that point. And, the market was just truly, truly nascent. We sat on the board of what eventually became Vera, but originally was hey, we should probably have a standard for all of these methodologies that people are just figuring out as they go along. And so I got into the carbon markets a little bit by accident, but definitely got the greenhouse gas accounting bug very early on and have never never let me go, because I don't think that there's a career that touches more aspects of decarbonization and the low carbon economy transition, and is also just going to keep you continuously learning. Like, I learn something new every single day on this job, and that I absolutely love, even having worked on it from a number of angles. So long story short, ended up going to WRI when Derek Brokoff actually left to go work at Carr. And basically, we thought we were going to get federal legislation at that point, right? It was Waxman Markey. It was all hands on deck. We were all going to DC to get this bill passed. Spent about a year and a half working very closely with Congress on the offset provisions, because there were 2 people in the United States who knew anything about carbon markets at that point, and I happened to be one of them. And so we wrote all of these provisions for the cap and trade program, which of course got killed, by at the last minute by oil and gas and ag. And then joined the State Department Climate Office at the beginning of the Obama administration. And so spent about 6 years at the State Department leading our work on enhancing capacity for low emissions development strategies, which was an incredibly awesome job, particularly for someone who was sort of mid-career, where they basically put us on planes and said, go negotiate bilateral deals and figure out how we're going to work with 25 developing countries all over the world, thinking about their low economy transition strategies and how they think about economic development and growth in the context of climate change. And it was it was an absolutely incredible opportunity. And so, ministers in Vietnam, digging into energy issues, digging into, ag issues, dealing with wood smoke issues in Malawi, working in Mexico. It was just, you really got exposure to sort of the full range of both issues and opportunities. And again, because I knew about carbon markets, I ended up getting put on the carbon market file at the UN. So we spent about 6 years. I started in Tianjin, actually, in 2010 at the negotiating room, and basically got dropped off behind the US flag and said, good luck, figure it out. This isn't a priority issue, but we don't want it to go wrong. So go work on this stuff that we don't really care that much about right now. And so we spent 6 years, working through trying to both regain the trust of the international community after obviously coming out of the last Republican administration, and crafting what ultimately became Article 6. And was a glimmer in our eye for a very long time. And someday over a bottle of wine, I'll tell you the story of how we almost didn't have Article 6 at all. We came within about an hour of having no provisions in the Paris Agreement related to carbon markets whatsoever, because we didn't have a deal until very late the night before we got the deal over the finish line. But that work, I think, really was obviously just incredible as we were trying to sort of negotiate with all of the different countries and accommodate all the different worldviews of, should these markets exist? Should they not exist? Should they have a role? Should they not have a role? What do we do with the legacy systems? How do we think about international emissions accountability and trading in a post-Kyoto world? So a lot of that conversation about, well, this infrastructure we built actually works pretty well, but it is politically unacceptable to the vast majority of the rest of the world. And so now we have to scrap it and basically start all over again. Long story short, after that, went to the private sector because I got super interested in just why things weren't getting built in the developing world and why the capital markets weren't moving, because I could see all the opportunity and the money just wasn't there. So joined a small private equity firm in the Bay Area, Mark Stewart's shop at Allotrope, and helped them build a public-private partnership practice, and started just really trying to get smart on, okay, what motivates money and why does money go where it goes? And, figuring I was never going to have to talk about carbon markets ever again after we got Article 6 done. And so we were working on going out and building real infrastructure in the real world. And that was also just an incredibly eye-opening experience. So then got recruited to go work at Netflix and stand up their buying program, and joined the Carbon Policy and Markets Initiative at High Tide just about 3 years ago.
Awesome. Yeah, thanks for sharing.
A straight line drive right there, Alexia. Just straight out of college, straight in. But I love it. But that's the whole joy of a career, right? Like, it's winding paths. A lot of young people that I speak with, they don't kind of get it. They think, oh wow, how did you get to where you got? And it's just like fortune and just right place, right time, and just curiosity and just just perseverance, and it's
grindingly
amazing the
hard
journey.
work over decades.
Yeah, and it's such an amazing story to hear from you, and to just see all of those winding paths, all those twists and bends. It's just really cool.
Totally. I don't, when you start your career, you never know, I think, where you end up. And I kept moving from seat to seat. I was like, well, look, we're not moving fast enough over here. So maybe if I figure out what's going on over at this part, I'll do better. And I will say I'm certainly a public servant at heart. Like, my happy place is really actually working in the public sector and on behalf of the public interest. And I'm so glad that I had the opportunity to work in the private sector, because I am such a better policymaker as a result. So highly recommend, especially to kind of early stage professionals, like, go work for the government, because you're going to get chucked right in the deep end and get experience that you would just never get at that stage in your career and any other job. And make sure you spend time in the private sector if you work on these issues, because the implementation challenges, the access to capital, all the nuts and bolts that you guys know very well of like what it really takes to actually get things done in the real world, I think is just essential information for people who are crafting policy that are hoping to drive real, scaled activity and output in the real world.
Yeah, 100%. And you having that experience as a, corporate buyer at Netflix, and, implementing a net zero nature strategy now kind of on the public policy side, it kind of gives you that experience as well. That's so great to have. And I want to double tap on that really quick, because we kind of stopped with your experience at Netflix. And at Netflix, you led the print and retirement of about 1.5 million tons of credits in 2021. What did you learn about the voluntary carbon market from the buyer's seat that you maybe didn't really see as a policy maker or private sector solutions provider?
Yeah, it's a great question. And it was such an incredible learning experience for me, because I had never been a buyer before, really, right? Like, I'd always been on this sort of policymaking and regulator side, as you said, and actually going out in the market, doing competitive RFPs, like going through the deep due diligence process, and also just kind of sitting where I sat. It was a really interesting moment in time when we stood that program up, because the net zero wave was like just getting going, and I would say it crashed pretty quickly thereafter. But there was this moment where we were like, man, like, we have serious tailwinds for the first time in the history of the environmental movement. And we were hustling to make sure that we could secure sufficient high integrity supply at reasonable prices. And I was joking, because I remember, we hadn't even done the full greenhouse gas footprint. And so we were doing these footprinting and trying to kind of estimate. And I remember the CEO at one point asked us, like, well, how much do you think it's going to be? And, I was thinking, I was like, oh, I'll be conservative and give ourselves some wiggle room and say $10 a ton is kind of the target price that we should be thinking about, just based on market prices then. That was high. And it's pretty incredible to sort of note, here we are 5 years later, right? Like, what a different pricing environment we're in now, and how quickly things have moved in the market generally, in terms of pricing, in terms of supply, in terms of consolidation around standards. The ratings agencies were just getting going then, so they really didn't have any bearing. And also, I think it's kind of a mixed bag to be a super expert on something as a buyer, because I needed to go really deep on everything to make myself comfortable with the portfolio that we built. And it also really made me realize that there are real limitations that you can do as a buyer, even as an expert buyer, right? Like, you're never going to be able to know everything about a project. You're never going to be able to look under every rock. You're never going to be able to anticipate every potential, personnel crisis that might happen with a project. And so that makes the standard setting and kind of safety nets that we build around these markets, like, all that much more important, so that, at the end of the day, when buyers buy, we want them to have full faith and confidence that what they're buying is delivering the environmental impact we need these projects need to be delivering, and that they don't have to worry that there's going to be some massive scandal. And that's not to say that, like, everything's always going to be perfect, because clearly it's not. Like, it's the real world. Things happen. These projects are often in very difficult and complicated places, right? Like, that have deep and long tribal conflicts or government issues or whatever. Like, that's always going to be part and parcel of this market, and we need to acknowledge that and embrace it and just accept it. But that exercise of going through and doing that diligence and kind of realizing what information was available and what information wasn't was really eye-opening for me. And also it made me realize just like what bad communicators we are in the environmental space. Like, it was the first time I had ever worked with non-sustainability professionals, and they spent most of the time I was talking looking at me like I had a third eyeball, because they didn't understand anything that was coming out of my mouth. And it was absolutely gobsmacking to me, because I was just like, and then I would be like, well, okay, let me go and find, like, where is the clear and simple explainer of what the difference between a carbon offset and a renewable energy certificate is that I can give to my CFO and explain things. And trying to explain like our world to a normal human made me realize like what a fundamental and systemic problem we have by the complexity and the jargon and all of just this like crazy apparatus that we've built around these environmental markets, much of which is needed, but figuring out how to talk about it in clear, cogent, comprehensive ways with non-experts is something that I frankly still struggle with, but that we all just really need to like get so much better than we are, because we just aren't breaking through.
I completely agree with that notion, because it's just a silo.
Yeah.
It's just experts talking to experts and just overly complicating things. And look, that was the genesis for this podcast. And obviously you've just launched a podcast earlier last year, right? And congratulations on the conclusion of your first season.
Thanks.
It's a great listen. You've got amazing guests. And so to that point, you're taking an active role as is Eddie and I to try to provide a digestible format for an audience to engage with carbon markets, to demystify the complexity, essentially, and to address a lot of those issues that are happening in real time. And I think that's one way that's just a reaction of market practitioners to try to just make it more democratic, effectively.
Totally. And I'm always amazed at how bad we are at talking about a market that does so many awesome things. Like, this market does so much good on the ground, as they say at Cool Effect. You know, I mean, we save forests, we provide drinking water, we feed children, we send women to school, we protect endangered species, like that we clean the air, we regulate temperature, we improve soils, we make air quality better. I mean, it's just like we are doing real good on the ground every day with these projects, and like just, you know, transformative impact in places that much of the world has just completely forgotten. And yet somehow we are the like green ghetto. Yeah, like we're the bad guys. And I still am just like, what is the disconnect here? Like, why are we having such a hard time breaking through? Because you look at the impact that these markets deliver. And I mean, you guys see it every day, right? Because you're delivering it. And I just don't understand why we're doing why we're having so much trouble, like breaking through and telling the story.
Yeah, we had Steve Zwick and Rene Velasquez on the podcast a couple months back, and they talk about the carbon paradoxes, right? And they wrote this great book about it that kind of contextualizes it. But it's this perfection paradox, right? And also they talk about like the intersection of capitalism and environmentalism. And oftentimes for the environmentalists, it's like this, and you began with the anecdote around your upbringing and the kind of the conflict and the kind of friction between loggers and you know, trying to feed their families, etc., and trying to obviously live within their environmental constraints, etc. And environmentalists tend to be very driven by ideology, right? Yep. And they do amazing work as well. And then you have capital markets. And so there's this distrust between the two, essentially. Totally. And I think from the environmentalist kind of group and lobby, we tend to be distrustful of capital markets because they're the reason why we got into this mess, essentially, right? That's the thesis.
Yep.
And so when there's a market solution to this complex problem, there's a hesitancy to understand it and a sort of reaction to make it perfect. But to your point, we don't live in a perfect world. We live in a very complicated world where people add that additional complexity and things go wrong. And so to your point around, the journey of a corporate buyer, we want to encourage corporate buyers to participate in this market because of all the great things that you said that this market achieves. And it's not the responsibility of the buyer to be the one that is the absolute expert and can go down to the nth degree around a project's validity and substantiate those claims. It's the trust inherent within the systems. The systems need to be robust enough to provide them with a level of confidence so that they can make a risk-adjusted decision or risk-based decision, right? There's always going to be risk. And we do this in financial markets, and risk is it's a variable that people take into account and that you manage for. And so carbon markets are no different to any other asset class in that context. But it's this complexity of all of these different emotions that come into it that make it really kind of cloudy.
Absolutely.
Yeah. And, shifting gears, I think that I wanted to talk about the Integrity Council for the Voluntary Carbon Market, the ICVCM, which launched the core carbon principles. We're seeing this kind of supply side transformation in the voluntary market, but also we're seeing demand side transformation as well with VCMI and the way that buyers go about making credible claims. So, there's arguments from folks that it's creating a lot of fragmentation and complexity, but just focusing on your work kind of with the ICVCM, do you think that the core carbon principles are becoming the de facto quality standard, or is it,
I certainly hope so. I mean, that was the intention. And I think the genesis of the ICVCM and when it was the task force was pretty fascinating, actually, because as you know, Bill Gates and Mark Carney and a number of other folks kind of started looking over the transom being like, oh, this seems like it's going to be a real thing, maybe, not our cute little artisanal backwater that we all like to play in. And then they started looking at the fact that we have, 15 different standards and we have hundreds of methodologies for sometimes the same project type. And we don't have standardized legal contracts. We don't have clear chain of custody demonstration. We don't have interoperable registries. We don't have pricing transparency. There's very fundamental things that the carbon market still does not have that are absolutely required for scale and for institutional capital to come in any kind of amount more than just sort of the experimental toe in the water that the vast majority of them have invested to date. And so the task force covered all of those things. But there was also, a real sort of crisis happening in the market at the time. And a lot of that was actually precipitated by the task force because the task force came in and was like, we need to scale this market. And there were folks in the philanthropic and environmental community who said, hold on, this market is not ready to scale. We have to solve the underlying integrity problem. And we have to solve the fact that we have this huge diversity of different methods, not all of which are kind of where they need to be from a quality bar. And so the ICVCM was formalized, born, the board was established, and, we spent, I think a year, 2 years writing the assessment framework. It took a very long time. I sort of naively thought, okay, we'll just get a few smart experts in a room. We'll do a quick and dirty review of the methodologies. I honestly went into that process expecting that most of the methodologies in the market would meet the requirements of the assessment framework as we had written it. And as we've been going through the review process, it's very clear that things have changed a lot since a lot of those methodologies were originally written. We have better data. We have a lot more transparency. We have a lot more visibility into what's happening on the ground than we did. Many of them need to be modernized and updated. And there was really interesting sort of pockets of innovation that were happening across a bunch of the different standards and methodologies. But there wasn't one place for all of those things to come together and start to get connected, to start to really stitch together a more coherent baseline set of standards, a benchmark threshold for the market, which we so desperately needed. And so that's really been the work of the ICVCM, is just kind of setting that bar. It doesn't mean that everything is perfect and that it's all exactly right. I don't think anybody thinks that, and certainly I don't think any other board members will say that. But it does mean that we have a pretty strong sense now of kind of what does best practice look like today, recognizing that best practice is going to need to change, and that the market is consolidating around the kind of best of what we have right now. And so I think that those functions, I know it's been painful for the folks on the ground who are trying to deal with these changing standards and the requirements and needing to update to newer methodologies and dealing with legacy credits and vintages that may be and I personally think about that a lot, right? Like I'm very cognizant of the fact that there are a lot of project developers who played by the rules, who followed the requirements of the methodologies that were available at the time, which was all they could do. And now they're sort of being told, well, sorry, nobody wants your credits anymore. And I think it's really, really unfortunate. I also think that the ICVCM saved the carbon market. Like, not completely to exaggerate, but I don't think we would have survived the last 4 years. And I don't think that we would have any demand for these credits if we hadn't been able to get organized and consolidated around what right looked like and start building that North Star. And now we're starting to see, the thing that I'm really excited about is that we're starting to see the compliance markets kind of look at us and say, okay, how do I think about this? And I'm very proud of Article 6, but I will say that Article 6 too, makes me a little nervous because countries just get to negotiate among themselves about where you set baselines, and there are not rules. There is not international oversight. It is a whole different co-opting ball of wax.
But they seem to be co-opting a lot of the work that's been done by the ICVCM.
Which is wonderful, and I hope that continues. Yeah. I really would like to see Yes, and I think Singapore has been amazing in helping benchmark kind of what right looks like for emerging regulatory regimes. And Rene, would love to hear your views on that too, since you're in the thick of it.
Definitely, but can I just comment on something you said? Because it's a great insight, which is, I agree. I think the ICVCM has saved the market because it creates that, not only that North Star, but it creates a system and a framework that then is scalable, right? So the knee-jerk reaction was from a lot of project developers, we're now going to be stranded on the other side of the integrity line. But the reality is that the ICVCM has actually done a really great job of reviewing all the programs and then the subsequent methodology. And it's actually proven that there's a really robust set of methodologies that are already in existence, right? We don't have to wait for the next generation. And that a lot of the market was actually really credible. It's also assisted some of the older methodologies to kind of push forward to become much more robust with dynamic baselines and other things like that. So it set that signal for transition. And then the market participants, the buy side in particular, can actually now rely on that quality mark. They can understand that the ICVCM is reviewing the standards and their methodologies are submitting for approval at the ICVCM, and then they're being checked against that on a project by project basis. And then you overlay ratings on top, and now they've got a system that they can actually leverage alongside with their own desktop due diligence and other on-site and in-field due diligence to actually really construct a portfolio to know exactly what they're buying is what it says on the tin, that it is 1 ton of CO2 that's been avoided, removed, or removed. And so I think from those perspectives, I think it's done a really great job. The other cool thing that it's done is that it's allowed for this kind of, I won't say Cambrian explosion, but has led to an explosion of new standards and methodologies starting to emerge, right? Because we had this kind of duopoly for a long time with Vera and Gold Standard. They both do great work, but it's actually led to the emergence of isometric and pure earth and equitable earth and Circarbono and a bunch of other standards that have come out. And so there's a challenge to the status quo effectively, and that's made Vera and Gold Standard better as well. So there's this kind of feedback loop that's positive. And so overall, I think it's been really, really good. And now, to the point around the market adoption, I think what we see on the trading desk and across screens on exchanges, although there's less liquidity these days than there was back in 21, is that the market rallies around that price signal, that it's ICVCM approved methodology, that it has a Silvera or B0 rating or Calyx rating, and that's a mark of quality. And so there's more bids for that, and there's a price basis to the upside for those really high quality projects, and that incentivizes other developers to start to go towards that higher quality mark. And then the final thing I'd say is something you touched on earlier on around the pricing, right? And when you were at Netflix, you were sort of looking at the high watermark around $10 a ton for high quality credits. Now it's not unusual to hear transactions being done in a $30 handle or above, right? Especially if people are going out on a forward curve.
Yep.
And that's really encouraging, right?
Totally.
Because new projects are coming to the market. We're looking at afforestation, blue carbon projects that are just much more cost intensive from a CapEx and OpEx perspective to get off the ground. And so they're actually now viable, which is great, right? So it's a win-win across the board. There has been some attrition, like you said. I think, let's just call it what it is. On the renewables side that dominated the market for such a long period of time, they've effectively been phased out for a large part. But they've found another market, which is the scope 2, REC attributes. And so renewables are kind of pivoted into just the megawatt hour as opposed to the ton of CO2, a complete fall off. So, I think it's quite good. And then to your final question around Article 6 and kind of the bilateral nature of countries under Article 6.2, I don't know if I share the same worries, because I'm biased, because I live here in Singapore and I see the work that Singapore is doing, creating a hub and spoke model effectively. The Singapore government just closed a tender where they're buying, right? They're providing a buy-side signal. So now, proponents in the market, we submitted a response as well as 51 other respondents to this RFP, which is really great, of project developers, consortias, trading houses, etc., trying to offer into a buyer, which is a government, which is exciting. And then Singapore is essentially looking to stimulate the supply of more of these projects by leveraging the relationships that they have with other host countries. And we're starting to see that being replicated in other jurisdictions as well. Obviously, Switzerland and Sweden and other, countries that are, Japan, for example, that are kind of axed, that they don't have the ability to generate supply domestically, are looking outwardly, which is great. But we're seeing other sort of pockets of supply in developing economies really starting to emerge. And we're seeing policy starting to shift. We see countries like Zimbabwe and Ghana and Rwanda and even Kazakhstan and Kyrgyzstan had some really interesting conversations this week around stuff that's happening there. And there's forward momentum around leveraging this toolkit, the Article 6 rule kit, toolkit, to actually scale development in their own countries along the lines of decarbonization, job creation, and obviously revenue generation to the country. And then the export commodity is carbon. And that to me is really exciting.
Totally. I completely agree. And, just to be clear, I am very excited about Article 6. It's really super gratifying to finally start to see some of these systems come online after a very long time. I did not think it was going to take us. Yeah, I mean, it's been a decade of negotiation around the rule book, and, hat tip to the negotiators who hung in there. I mean, because it is not an easy process at the UN, and it requires huge personal sacrifice. And definitely. Just so grateful to the people who do that really, really hard work, because it is a very difficult job. And also, we have a lot of work to do to get ready for Article 6. And by and large, with a few bright spots and exceptions, Rene, as you were just discussing, and I'm glad that this group of companies is front running, because I think they're going to set the kind of the pace around quality expectations in particular. But as we get closer to 2030, as NDC reports, start getting more real, as companies or as countries really realize, like, oh, we're actually not on track to deliver, our NDC and the reductions that we said we were going to deliver without markets, I anticipate that we're going to start seeing a lot more interest and attention on the part of country governments in Article 6 and access to international trading as a means of demonstrating progress towards their Paris Agreement commitments. And if that all is done right, it's going to be an amazing benefit for the developing world, for nature, for investment in new high integrity sources of energy in these places. Like, we need this money, and we need it flowing quickly, and we need it flowing kind of at scale. And so that definitely is a bright spot, I think, in what is otherwise a pretty challenging time, certainly in my country.
Yeah, most definitely.
Yeah, and one of the things I wanted to double tap on was around some of the concerns with Article 6 and the compliance markets. And one of the biggest unresolved questions is whether host countries, will be able to authorize corresponding adjustments, project-based VCM credits at scale, right? And
Yep.
I would love to get your take on that, kind of what you've seen. Are you seeing that happen? What do you think is the barriers there? Because we're not seeing that happen with Corsia, right, as much as people would like to.
Yeah. I mean, I think there's a lot of barriers, and I really hate to be the annoying person that's like, we told you so. Like, I spent a lot of time in 2010 at the State Department being like, guys, we really need to invest in capacity building now so that, when the time actually comes, when we need these markets to function, we've done the 5 years of work it's going to take to get the institutional arrangements established in the countries, to pass the domestic regulations, to actually write the international rules around what interoperable registry and transaction information exchanges look like, how are regulated exchanges talking to each other across capital markets, and what is just the process by which a government starts to think about what has been an almost entirely unregulated set of voluntary activities that have been operating sometimes at large scales, right? Like if you think about a Kenya, for example, or even in Indonesia, like they have a few very large projects in their boundaries, and we do not have any of the interconnected accounting infrastructure that we need in order to really seamlessly to figure out, okay, this fits here, this fits there, you get this, we keep this. It just doesn't exist yet. And so there has been work, the World Bank has been leading a lot of capacity building work, the Article 6 partnership, a lot of bilateral donor countries have been doing capacity building, but it hasn't been coordinated. It hasn't been, I would say, executed evenly, right? So, a few countries have been able to sort of get out ahead of the pack and figure it out. But I don't think that anybody has a fully operable system that I'm aware of that sort of does all the things we need these systems to do over the medium to long term. And you still deal with the fact that, governance and institutional capacity in many of these countries is very low. That's just a reality of working in developing countries. And the government cannot afford to pay people enough. And there are corruption issues. There are real, just honest to God implementation barriers on the ground that make it very difficult to quickly sort of stand up what is first of its kind, highly technical, very complicated regulatory systems and infrastructure overnight. It's just not going to happen overnight. And so a lot of the conversations that we've been having recently are just across all of those donor communities. And I think this is one of the reasons why I really like being in philanthropy now, because you can kind of bridge between the private sector and the government and have those conversations around, okay, how can we facilitate enhanced connectivity and coordination? Can we get the right people around a table in the room and really do the work to figure out, okay, what needs to get built where, when, and what are the kind of international models that we weren't able to get political agreement for at the UN, but that we know are really important and could help standardize, accelerate implementation and execution of a lot of this core infrastructure that we need to very rapidly put in place in order to get this market operating. But all that to say, I just recognize and acknowledge what a difficult sort of environment project developers are navigating right now, and frankly, communities who are hosting projects that are delivering real benefit and have been getting, kind of an unadulterated flow of finance from those, are now having the government show up at the door and be like, oh, we'd like some of that. Let's take a portal. We want our cut. And so I think there's, it's going to be a little messy and it's going to be a little bumpy. And I wish that weren't the case, but I think that's just the honest reality.
Definitely the reality.
Yeah. I will say though too, and something I tell the companies that I work with a lot is, just because a voluntary credit does not have a corresponding adjustment right now is not an indicator of its quality. Definitely. And they're two separate sets of books, right? So a country's ledger for its nationally determined contribution is actually never really going to touch or be impacted by a company's amalgamated set of international sources that are scattered across, often hundreds of countries, and then amalgamated into this made up number that doesn't really live anywhere. It's not a real accounting number. It's an accounting convenience that we use and based on estimates, right? And so I think that just to assuage the worry, like, you don't have to have a corresponding adjustment to have a high integrity credit. And
I completely agree.
if you want to deliver incremental environmental benefit over time when these systems become available, awesome. Buy the correspondingly adjusted credit, but you don't have to, and you don't need it today. And if you can't get it, we cannot expect people to have them.
Yeah, completely agree. But and also, like you said, they're two different books, right? One's for countries, and the other one's essentially a voluntary claim. And that it really, there are some points where it intersects. Like, for example, with CORSIA, it is a compliance system, right?
Yep.
And so it's treated essentially as a country, and there's this corresponding adjustment that goes out there. But effectively, voluntary buyers that are insisting on units that have the corresponding adjustment are essentially, one, increasing ambition in host countries, but also they're reducing the adequate supply that's available out there. And so they just got to be conscious of that. And look, it's a market, so buyers go where they want to, but there's going to be a premium associated with units that have that corresponding adjustment. But to your point, the architecture is being built right now, and it's very different in every different country. And I think what we need is a consensus of what works, what doesn't work, and then for the countries that are in the second pack, kind of following on to emulate what the leaders are doing to actually be able to deliver on the potential for scale. So yeah, completely agree.
Yeah, and I want to be cautious of your time. We're gonna be wrapping up in 10 minutes, but I think I want to kind of zoom out here because we've touched on a lot of different topics, and you've had a unique perspective to a lot that's happened in climate policy and corporate climate initiatives. And I would be keen to hear how you would characterize kind of the state of global carbon markets in 2026 compared to some of the other years that you've kind of seen. We're seeing kind of a lot of innovation technologically, and this kind of supply side integrity, but we're also seeing conflicting political views, and with what's happened with the U.S. administration pulling out of the Paris Agreement. So it's like it's a roller coaster of emotions, it seems like, for a lot of people in the market, right? Like, some people are like, oh, it's it's all gonna come to an end tomorrow, and then others are like, oh no, it's we're at the peak of the market, right? There's like all these different viewpoints, and I would just love to.
We're certainly not at the peak.
God, I hope not, because I'm going to be really sorry about how I spent my career if we are.
No, it's just beginning. I subscribe to your thesis, Alexia, but maybe that's because you're kind of my vintage. But this run to 2030, there's this invisible line in 2030. But I just think the markets are heating up. Like, I can tell you that we were talking internally around the cyclicality of the market, right? Q4, Q1 of each year tends to be the busiest time, and it's no surprise. It's because when corporate budgets are being kind of finished up effectively. Right?
Well, you're finishing your footprint from your year before, and you need to do your procurement, so you got to top up your supply.
So procurement just kind of all comes in at this one point in time in the market, and across our desk, but across other peers and other companies, like I know this to be the case because I've had a conversation with a number of the leaders, is much of the liquidity in the market occurred in Q4 of last year, right? December was the busiest month in recent memory. And we're seeing now across the tape, effectively more and more transactions being done across not only the spot market, but across also on the forward curve with offtakes being structured, being announced, with something that you said earlier around understanding ultimately what the corporate's mindset and what their objectives are. They need to meet a certain budget, but they need to have price certainty, and they need to have certainty around the supply, right? And the variability or the uncertainty within any of those buckets is worrying as a business, because you have to live within the constraints of operating as a business and within a budget. Yep. And so we're starting to see more and more of those deals being structured, and now not just that leading pack of the big Mag 7 kind of buyers coming into the market, but we're seeing the emergence of the next crop, insurance companies and large multinationals starting to enter with a very well-designed and defined program in terms of their procurement. They have certain geographies that they want to identify projects from. They have certain quality bars that they want to source from. They want to see data rooms. They want to do deep dives into the projects, and then they select for the best projects, and then they structure those deals. And they can do that now because the market's relatively slow moving,
consolidated,
and consolidated. But as those pools of really high quality projects start to dry up, which I think for a large part they have, then the market starts to ramp up. In terms of acceleration, where more and more projects start to sort of come into the market, and other traders, risk takers, start to kind of get in front. And now we start to see liquidity re-emerge. And so I think basically in summary, we're seeing the beginning of a renaissance in this market. And I think that 26, 27, 29, I think will be really, really good years to build upon the foundation that's been built certainly over the last 4 years with ICVCM, et cetera.
Yeah, absolutely.
We're not at the top. It's a long way to go.
Definitely not. No. And so we launched in September something called the Verified Carbon Market Coalition, which really was born out of the need we saw to help formalize just some of that connective tissue and cooperative effort across government, the development community, the capital markets, and the nonprofit and civil society space, and leveraging kind of philanthropic investment and resources to help us go faster around some of those key points of central work that we know we need to do. But part of that is building strong and durable demand signals so that we can mobilize capital into long-term offtakes. And, it was it was a seller's market when I was first buying, and we were hustling. And so I did a lot of long-term offtakes, and they were great. Developers I trusted, amazing projects that I had, largely exclusive rights to the offtake from, competitive pricing, often pay on delivery. Like there was a lot, there's a lot of benefits to being a long-term kind of stable buyer in this market because it is still small and it is still really relationship based in many respects. And so for corporate buyers in particular, getting out, building those relationships with the developers that you know and trust, building investment portfolios and opportunities with them, I think is a really smart thing to be doing, particularly as we continue to evolve. One encouraging sign I've seen is just this notion that what we really need to be structuring and leaning into more of is a portfolio approach. And I think that portfolio approach, like we built a portfolio, Netflix was the first company to include, a range of mitigation outcomes in its net zero plus nature commitment, including both reductions and removals, but also high GWP gas destruction, right? So like methane abatement and destruction has always been one of my favorite offset project types because, once you destroy it, you're done. It's permanent. That climate benefit lives forever. You don't ever have to worry about it coming back. Like you're good. And that whole set of conversations, I think as we get clearer on what does a really robust portfolio of projects look like and how do I hedge against certain types of risk. And I think I would love to see us get to a place where it is less driven by whatever headline and sort of project type du jour happens to be popular and really much more about like what is a robust high integrity set of investment decisions look like. So when we launched the VCM Plus, I personally was like, I want to know that all this work in this market is amounting to something material when we are talking about the fight against climate change. And so we've set a collective goal for the coalition of delivering 5 billion tons of abatement between now and 2035. That's about 5x more than the market is delivering now on an annual basis. But I think it's actually a ramp that we can get to and, represents a significant portion of the mitigation that we collectively need to be delivering on an annual basis. And so for me, and I think with the compliance markets coming online, we could exceed that number, in fact, pretty easily by 2035. And so then, you're really starting to see the impact that carbon pricing and getting these kind of emissions measurement systems in place can deliver through high integrity market-based mechanism, which say what you want about markets and market-based mechanisms. Like I still think that putting a price on carbon, pricing the externality and enabling it to be easily transacted, backed by strong standards, is the fastest, most cost-effective path to scaled action that we have, absent just regulating the shutdown of the fossil fuel-based economy, which is not going to happen. So, I am very bullish on the role and opportunity of this market to make a really meaningful contribution to solving this problem and to helping smooth the glide path to net zero so that we can be mobilizing resources into the right kind of low carbon technologies and climate solutions, including nature, especially nature, now when it matters the most. And as you noted, Rene, the voluntary action and standards are really front running and informing the emerging regulations. Governments are starting to integrate voluntary credits into compliance systems and vice versa. Buyers are demanding those really higher standards for credit quality, claim transparency, and third-party assurance, regardless of whether participation is voluntary or mandatory. And countries are increasingly turning to private international finance to help achieve their national commitments under the Paris Agreement. And so the VCM Plus Coalition really embraces this full picture. What we're seeking to drive is a unified, verified carbon market, voluntary and compliance alike, that is transparent and trusted and built around that kind of bedrock, high integrity science, robust oversight, trusted communications, really targeted finance so that we know the money is going where it needs to go, and scaled demand. So I'm really looking forward to digging in on some of these foundational pieces over the next few years that we still need to get in place. And as unsettling as the current political environment is for all of us, in very, very real ways, I think it also presents an opportunity. These kind of moments of rupture when what seemed inevitable now seems impossible is an opportunity for us to really think big about how do we forge new partnerships, how do we reach into new sectors that we don't work as closely with, and how do we really move together more quickly to identify and land on the pragmatic, impactful solutions that we know are available to us through deployment of these markets.
Completely agree. And on that point, if I can just add, history tells us that whenever there's that policy vacuum, right? You talked about the long gestation around the Article 6 rulebook from 2015 to now, essentially. And, from the 2006 kind of, and even 2007 kind of like hopefulness, and then kind of the depression thereafter, right? Like it goes in cycles. But actually voluntary action tends to be counter to the political kind of whims. When there's an absence of policy direction, voluntary action is the de facto. It is the default opportunity. Yeah. And to a lot of the credit of a lot of the corporate actors, that they've actually stepped up during those times of uncertainty to really to shine that bright light. And I think also from a standards perspective, like the emergence of voluntary standards and methodologies happened as a result of the collapse of like the Kyoto Protocol, for example. So this is an opportunity, as you said, like through every good crisis. Don't waste the opportunity, essentially.
Yeah, absolutely. And we've seen time and time again that those initial voluntary programs and actions help lay the groundwork and political acceptability for future regulation. So that's exactly how the California system evolved and a number of other regulatory regimes. So we see a lot of value in continuing to invest in the voluntary market infrastructure and building that out, while also driving towards as much regulation as we can in all the places that matter.
Yeah. And for the pure simple reason that policy, and once you have compliance, it's sticky, right? The problem, the Achilles heel of voluntary participation, that it is not binding, it is not sticky. But nonetheless, it can still be a crucible for innovation. And so we've harnessed that to the maximum effect, I think, and we can now continue to move forward. But like to your point, it's also now an opportunity for corporates to get ready ahead of an emergence of regulation that comes into effect. Because nothing will motivate a corporate more than the fear of non-compliance.
Totally.
Yeah. Well, look, Alexia, this has been incredibly valuable. You've given us a perspective that very few people have, and the work that you're doing is critical. So thank you so much for joining us and having this discussion.
Thanks for having me. It was a pleasure to speak with both of you.
Thanks so much. Please join us again. And congrats again on your podcast. I'm really glad that we were able to cross-pollinate.
Yeah, totally. It's great. I mean, we'll do a whole focus on carbon markets next season. So I didn't want us to jump right into the deep end on that, but we're gonna be focused on there. So stay tuned, and we'll definitely be in touch.
Awesome. Thanks, Alexia. Really appreciate it.
Very good. Thanks, you guys.